What is going on, YouTube? It's that time again. It is Thursday. It is Brendan from Market Makers. Boy, did Powell give us what was perceived to be a very dovish speech. This was after the Fed speakers like Bullard, Meester all talked, and they were all very hawkish, so we have a long way to go. Powell tried to come off measured. The interview after was absolutely horrible, but the market saw what it wanted to see, which was what they perceived to be weakness by the Fed, hence causing a rally, hence on my screen causing the DXY to dump, break its 200 moving average, bounce off 104, spot 835. This is Powell. I'm telling you guys, this guy's a piece of work. So he doesn't want, ostensibly, it makes his job a lot harder to have loosening of financial conditions, but he just did what he didn't want to do, which was loosen financial conditions and create a pump, because now all the permables on TV. And guys, I have to reiterate something for you, and I'm not saying this to be mean, I'm saying this to be factual. The vast majority of the people you watch on channels like CNBC that are professional money managers or portfolio managers, they are textbook definition stupid. And if that sounds harsh, you guys probably already guessed that if you know who Jim Cramer is. The inverse Cramer fund in September was up 70% for the year, picking against the opposite of what he picks. But just to give you guys a flavor of this, I want to share this article with you because people tell me all the time, they message me all the time, hey, I like this guy like on CNBC and he seems to know what he's talking about, things like that. And I'm like, yeah, just be aware, most of them, as in 83% of them, lose against the S&P, meaning your grandmother at home could just buy the S&P on a year-on-year basis and beat all of these professionals on TV. So when you have a panel of 4 or 5 people, just remember, 4 out of the 5 can't even beat the index. And if you don't believe me, here's an article from Bloomberg. Stock pickers were doing well this past year. Yeah, it's not hard because the market's been in decline. I want to get down to the good part here. Just 17% of U.S. large cap stock pickers beat the S&P 500 over the past 10 years. Keep in mind, the longest bull run in the history of the equities, the longest bull run, and only 17% of them were able to beat the S&P over the past 10 years through 2021. And that number drops to 6% over 20 years. So 94% of the people you see on TV, again, professionals that went to Ivy League schools, and they talk about, well, Apple's telling me a story right now. I really like the story Apple's laying out. And I know that when Apple comes out with his new phone, they go up 2.3%. And then you see a 1.7% follow through within the next quarter. When they're sitting there sounding like they're educated, they all lose money versus your grandmother just buying the S&P. I mean, isn't that amazing? 94%. So just keep that in mind because there are superstars out there, again, like Stanley Druckenmiller, who made 30% returns for 30 years on Wall Street every single year. That's amazing. That's why I give things that he says more weight, such as the economy is going to be depressed and the markets may not have a new all-time high for a decade. That's his forecast. I'll play a clip from him maybe next video. But just understand that, guys, because that's so key. When you find these guys you like that seem like they have a chart or they have a good story to tell or they're confirming your bias, confirmation bias, we're all humans, just be aware they all lose money versus the S&P. And if you guys watched my Shmita videos, then you would know just take your money out every 7 years and you would 3.5x the index. 3.5x versus 94% losing against the index over 20 years. So 93%. Let's go ahead and go back to the story here. So I get off on a tangent. Now think about that parallel, by the way, for crypto. Think about that parallel. Crypto has only existed in the longest equities bull run in the history of the stock market. So all these big drawdowns Bitcoin's had, 75%, 80%, it's all been in the backdrop of the longest equities bull run in history. And where are we now? We're on the precipice of an economic disaster next year. Again, Nouriel Roubini calls himself Dr. Doom. People were calling me Dr. Death. Nouriel Roubini's forecast for next year, his baseline is a stark recession such as mine. His baseline is a financial crisis such as mine. This isn't like, I didn't come up with this. This is my baseline, as well as Michael Burry, as well as Jeremy Grantham, as well as Ray Dalio. Billionaires who have made piles and piles of money being successful investors by understanding economic market cycles. Okay, that's where I'm at. And to confirm some of that for you, we had the yield curve inversion. Again, that recession is coming next year. I dismiss almost instantly anybody on TV that says, well, the soft landing's not out of the question. Why is that dismissive? Aren't I just confirming my own bias? Because in the whole stock market history, it's never happened when inflation was above 5%. 9 times above 5%, all 9 times recession. When the 3-month 10-year invert, every single time we had a recession, except one time under Reagan, he was able to avoid it. So whatever that hit rate is, I think it's 11 out of 12. So basically over a 90% hit rate on that. Guys, every economic indicator shows you're having a recession. And to confirm that again, Chicago PMI came out the other day, manufacturing. The manufacturing numbers came out. It was forecasted to be 47. It came in at 37. How low is 37? That was the bottom of the pandemic crash. That was the bottom of great financial crisis. The bottom, okay? The bottom of Y2K. We're at the bottom now, meaning manufacturing is collapsing and we have GDP over 2.5%. So that means the actual recession, it's going to be dramatic and horrible. Not because I want it to be. I want you guys to be prepared for it, because if you just watch TV, you'll have no idea. If you're just on Twitter crypto, if you're just watching, Carl the Moon, MM Crypto, Four Flies, those guys, they have zero idea what's happening in the macro market space. And that's why you see videos with 130K Bitcoin. And this is also with financial people. Look at Kathy Wood, right? ARK Investments, the worst performing ETF on Wall Street this year. And she's out there saying Bitcoin to 1 million in 7 years by 2030. 1 million. You're not going to have a new all-time high in the stock market most likely in the next 7 years, let alone Bitcoin at 1 million. The reason I like Bitcoin is because there are going to be assets that can parabolically move when we hit a bottom in the market. After the recession or during the recession, when everything craters, that's when we're going to look to accumulate, guys. And I've showed you those numbers. 39, 3,800, that's where you're buying Bitcoin. Because while stocks might move up and down a few percentage points, Bitcoin could move up and down 10, 20, 30%. That's the key to understanding which assets will move and which assets you should invest in. And speaking of that, I'm going to show you Tesla by popular request, but also because it's really the only stock I'm looking at buying when we do have a bottom. So I want to share that with you guys. Let's go ahead and start clicking through charts. And the inflation numbers, the PCE came out, guys. This is from the Cleveland Fed, assuming they updated it correctly. It came in slightly lower, as you can see. This is what the Fed tracks, 0.40 versus 0.41 for last month. So everything was slightly lower or at expectations. And yeah, so the PCE itself came in higher, 0.41. But overall, it came in lower or at expectations, like core 0.51, 0.51. So the market didn't really react much today. As a matter of fact, it was selling a little bit, but again, we had that pump yesterday. Let's go ahead and look at Bitcoin on the weekly. I want to show you guys something. Bitcoin on the weekly. You guys remember my Dante's Descent? I removed that, obviously. I put on some GAN fans because I want to give you some more predictions, because I know you guys love this stuff, right? Predictions are difficult when it comes to time, and this is my opinion. I'm not saying this is a fact, but especially in the world we're living in, okay? So if I told you Bitcoin could do this on this date, like I did with Dante's Descent, I got within 24 hours on a year-long pattern and gave you the trade the day before, and you got a 28% drop from my trade 24 hours late, but you got the trade ahead of time, okay? And you got the entry spot on. So this is exactly what you're looking at here. Now, what I'm looking at, guys, I'll show you why I'm showing this date, January 9th. January 9th. The reason this date is interesting to me, when I'm doing sequencing in the marketplace, just like the Dante's Descent, right? I'm looking at waves, I'm looking at symmetry in the marketplace, especially with Fibonacci numbers. 9 bars up, 9 bars up, and we have our bars here right now that we're on our count. So when I'm looking at this, that 9th bar takes you out to January 9th. January 9th. My dog is rocking my table. They're like fighting underneath the table for a bone. So hold on one second. There we go. All right. So here we go. 9 bars up gives you to January 9th. And when we're looking at this, that's 2023. The reason this is interesting to me, a couple of things, because I know people are saying, oh, Bitcoin's going to do this, Bitcoin's going to do that. You know, this pattern, as I said before, and again, I removed all the Dante's Descent stuff. I have fibs on here now and GAN fans, and I'll show you why. But this pattern was interesting because remember, every swing high was never defeated in these waves, okay? So that would mean this candle right here, 21,476, let's call it 21.5, may vary by a couple hundred points, depending what exchange you're looking at. This is on BitGet, of course. This is 21.5. That means Bitcoin won't come above 21.5. And where it's looking to drop, the reason this is interesting, you have your 45 angle that came from the pandemic low, right? That separates, you're now bearish. You see that? And look how beautifully this segregated the marketplace. And now you have your 45 angle coming from the top. So you're going to have a lot of resistance on this candle or potentially the following candle, right? Because we've had this happen before with the 24-hour delay. So it's that candle, that January 9th candle or that following candle where I'm expecting to see the candle level down. Why are time predictions difficult? Again, there's a conflict going on. There could be a weapon used that's not allowed to be used. The markets will just drop, including Bitcoin. Powell could pivot between now and January, and the markets will rally. So outside of existential catalysts or things I cannot control, the candlesticks are telling me I'm looking at January 9th right here, or that following candle, we should have the next level down in the marketplace. Again, looking at 13.8 as that level. If we hit 13.8 before that, then we could be coming down lower to our 10K level, okay? Something like that. We go ahead and pull this up and see what that level actually is. That actual level would be the 8, 9K, 10K level, somewhere in there. On the GAN fan, it's 8 to 9K. On the fibs, it was 10.5-ish, okay? So that would be that next level. So January 9th, guys, mark your calendars because you know I'm going to tweet it out. But we'll see if that holds true. And again, I anticipate the markets, especially when the recession hits, getting much worse. I anticipate that happening potentially during Q1 next year as earnings start coming in, or just slightly after Q1. And you're always looking at March. Remember, the 45 angles on the GAN calendar are March and September for market changes. So you could start seeing the setup for big dumps in March. You could already be dumping in March. But again, time predictions, very difficult. But what I do know is I've been giving you these dead on predictions. I gave you guys this right here, the 48,266 trade, which captured, I gave you this on YouTube and in the room, which captured a 64% decline in the market. And I gave you the trade here that captured a 28% decline in the market with the trade ahead of time, okay? And it's all following this pattern still. So we could have Bitcoin wave up and down here. I think your ceiling is going to be that 21.5 again, just like every single ceiling from the swing high has not been defeated. So we'll see if it defeats 21.5. Doesn't change the timeline here because I'm looking at resistance combined with the Fibonacci pattern that we're still waving in, okay? So this is what I'm predicting here, January 9th, and that follow-up candle, if it's not January 9th, that'll be the January 16th candle because that will run the 9th to the 15th. That 24-hour turnover, just like we had for this last drop, could be that next candle that actually does a drop. All right. So keep that in mind, guys. And guys, you want to come trade with us, learn some of these super secret esoteric techniques, then come check out our Discord. It is on sale for the rest of the year. Download Discord. They email you, open the email, click our link. Okay. Click our link in the video description to get that half off discounts. $20. You want to come trade with us, $20 for your first month. Come try out the room. Over 100 people have done so since since we started doing this promotion over a week ago. I think you'll really, really enjoy it. And this video is going to be brought to you by BITGET for all the cryptos, SimpleFX, where we trade everything else, commodities, Forex, equities. Both have been excellent exchanges. Okay, tutorial guide for SimpleFX in the video description, as well as a massive bonus that they are still doing, only available with my link, whereas most of the crypto exchanges have pulled back on everything. SimpleFX is an FX exchange, and they have a very, very lucrative bonus available. Read everything in the description. Oh, last plug, I promise. Twitter, guys. I've been more active on Twitter since Musk bought Twitter. Follow me on Twitter. So I'd like to have you guys follow me on Twitter. I don't know what we have there now, 7,000 followers. Definitely follow me there. Be fun. You can also ask questions. If I can't answer something in YouTube, you can always tweet me or whatever, and you know, that type of stuff. But you can do all that in our room as well. So you should definitely consider joining our room. Do yourself a favor. And let's look at Bitcoin on the daily. So if 21.5 was our ceiling on the weekly, what's interesting here on the daily, look where the 200 is. Basically at 21.6, right? So this is going to keep coming down, and you're going to impact it somewhere. Maybe at 19, maybe at 18. Who knows where Bitcoin's going to start moving back up. But let's see if we can kind of get some guesstimates if we have any type of setup developing here. Let's look at our volatility. Let's see it's expanded. This was our drop, the 28% drop. It's expanded. It needs to bottle back up on the daily. So, you know, come to, you know, we got 4 weeks here in December. Today's December 1st. So we could just be going sideways again to load up and then watch that January 9th candle. That's the next market maker's prediction. And all right, let's get this off. And is there anything else we want to see here? So that's 17.1 target, 17.119. You see that? We talked about this the last couple of days. Again, this has been providing shorts. We've been taking trades at this level in the room. Lots of people want to look for upside. I understand that notion because of what happened with the marketplaces. I personally, again, but I'm a swing trader. I'm not a scalper, right? I personally don't see an intraday movement here that wants me to go to the upside. So let's go to the 4-hour time frame. 4-hour time frame is more interesting. 521 volume weighted. You have a bullish cross. It's starting to have a rollover right at that level of the 618 of 17,119. But again, my target as an intraday trader is looking at this, right? I'm looking at the 200, 233, and these levels are higher up. This is at 17.6. And this is at 17.9-ish. So as these start to descend as well, this is the impact that I'm looking at. And maybe this shoots up here. Maybe the markets get bullish, or maybe this just, you know, collides somewhere down here lower with Bitcoin. Oh, we didn't look at the money flow and stuff. Let's go back to the daily. So money flow went bearish, came back up, but you can see it looks like if it starts rolling over, it's going to be making a double top, okay? So that's something that you definitely want to watch. And again, you have your money flow that peaked out up here on this candle, and then you have higher high in price, lower high, developing bearish divergence again here, okay? If price goes up more and the money flow doesn't reflect that, watch your bearish divergence. Look at the volume rollover, okay? This is volume momentum. It's a momentum indicator, VROC. By the way, even with the discounted sale, you still get our free market maker customized indicators, MFI, and our VROC, volume momentum, okay? So this is still low volume, okay? Even that pump candle that brought you up was negative volume momentum. And you do have average daily volume, but the momentum, right, the force of the move, not there. 4-hour time frame, let's look at this here as well. Open this up. You can see on the 4-hour time frame, you got close to being overbought, came back down, going to probably bounce back up. Again, VROC rolling over. Not a lot here on the price action, okay? Really watching the 200, 233. Let's check out Ethereum real quick, and then we're going to check out Tesla, guys. So looking at Ethereum, the 4-hour time frame, you hit the 233. So Ethereum's more interesting. You're getting some pushback here at the 233. What I want to see is if Ethereum holds this line, right? That basically 1257 right here, this white line, you're at 1273. Comes back up, maybe sandwiches these, get some spiky tops above this, get some type of impact here. But then I'm going to marry that to the direction in the broader market to see what Ethereum's doing, because that's important to see what equities are doing. Are equities pushing up? Are they rolling over? Are they making tops? We're going to go over those charts. 4-hour time frame, similar to the Bitcoin, came down towards the median line, still in the bullish territory, got a slight angle bias back up to the upside. Looking at let's go ahead and jump to Tesla since I said it, and then we'll go to the indices. Here we go. All right, so Tesla. one of the only, if not the only stock that I will be buying. So let's look at Tesla. Partly because I do think the creator, whether you like him or not, Elon Musk is a genius, but also because, just whether you agree with it or not, the politics of the world, what's going on, EVs are going to be a huge role, but he also has SpaceX, Starlink, and he has a cologne, right? Burnt hair. So if you look at this, guys, I want to show you how I'm analyzing Tesla. This is a weekly time frame. So the volume here is not that important to me because I'm not using weekly volume necessarily in my day trading, but what I'm looking at here on Tesla is where you are. You're at the 200 and 233. You bounced off the 200 or 233, almost wicked the 200. Had the 50 weekly moving across you here, and Tesla's at 195 as we sit. What are some things that you guys want to see? Probably targets, right? Well, if you look at this in the way of impulse waves, and notice how the 45 angle from the pandemic low perfectly subdivides the market. Again, segregates the market. Bullish above, bearish below. When you lay out the Gann properly, you get an excellent market view. You could also see this with like just throwing down a ray. Where's my ray? Horizontal ray. Something like this. Got to find a little bit higher up, maybe right about there. You can see how all this would be bullish, and then you got a double top up here near 50, broke down below it, okay? So the way I'm viewing this, and the 8-1 fan down here has about a $58 target on Tesla. That brings you back to this peak right before the crash, okay? So that's February 2020, right before the crash. You were at $63, okay? But let's go ahead and get rid of the Gann fan. I want to show you some Fibonacci stuff here for targets. So when I'm looking at this, guys, I view everything in the law of three, natural law trading, Gann concept, right? You see me do this. So we don't have a three-wave pattern, so we have to use an ABC. So if we're looking, we've been blessed with having an obvious starting point, which is what? The pandemic low. Starting from the pandemic low, coming up to that first swing high, down to your deepest swing low here, and then up to your blow off top, okay? 1, 2, 3. Everything after that's been a correction, all part of a big ABC, okay? But you don't need to see the ABC part. What I want to show you is this. When I'm looking at targets, I'm using different Fibonacci retracements and fib wave projections. Again, Fibonacci is all about understanding the expanding, contracting market, just like the Nautilus shell that you see on so many Fibonacci books. It's expanding and contracting. So you have to find the correct ways to measure things. The blow off top wave, just like we did with Bitcoin, wave 3, good place to take a retracement wave to see where this would take you. And you look at your 1618, you're down at $40. You see that? $38.85. And some of you watching this are like, this guy is effing nuts. It's not going to $38.85. Oh, just wait till you see what happens next year. I want you guys to come back to this video this time next year, and you guys can message me and be like, damn, I can't believe how either A, close you got or how spot on you got. Because I'm telling you guys, the recession that will come is going to change everything, and you're going to see the deepest declines in your lifetime. I'm 44. I saw the great financial crisis from the front door at an investment bank, and I saw Y2K. I was trading energy during Y2K. I saw these things happen, and remember in the Y2K, NASDAQ went down 84%. So yes, Tesla, this isn't even the pandemic low at $40. Just keep that in mind. How did it rise like this? It's like the king daddy of meme stocks, right? This has the largest amount of options trading on Tesla of all the stocks. I heard something say like of the next 10 stocks combined before at the peak of the market with everybody involved, with Robinhood, everything else. But this Tesla had a lot of user involvement. The bottom for Tesla, again, during that pandemic, guys, it was what? $23? So you're still above the pandemic. This is just a simple fib wave retracement off of the wave 3 of our 3-wave law of 3 pattern. Okay? And there's other ways you can do this, but this is where I'm buying Tesla. You're bouncing off the 200. If you look at the chart here, if you came back up to 237, excellent opportunity, depending on what the market's doing, to potentially put in a trade. But you can also do this with Fibonacci waves. You can do this different ways to get different targets. And when you do that, we can go ahead. Let's do a big fib wave here. We can try, let's try this way. Go from the swing, this swing, come up with $27. So $38, $27. Point being, and if you look at your fib layout to see how accurate it's tracking, and you can move this fib waves around, guys. I'm not going to do it here in the video. It's going to be 3 hours long. But you can move this around. You want to see how it's tracking, right? See where you're getting your hits, how accurate is it tracking. And, you know, again, that fib retracement is where I'm looking. 40 bucks. Let's just round it up. 40 bucks. Tesla, that's my terminal target. You're going to have a lot of targets between here and there, ups and downs. My terminal target is $40 on Tesla. That's where I'm accumulating it at. And we'll do some deep dive videos maybe on the channel if you guys are interested. If you want to see like a deeper dive into different time frames in Tesla, and I'll just put like a Tesla video out. I'll do it if people want to watch it. Not going to do it if nobody watches it, right? It takes time, all that stuff. Let's go ahead and keep zooming through here. The Dow. You know, part of the reason I talked about the portfolio managers being textbook stupid is because they don't understand technicals at all. So Santa Claus rally, I guess it's all semantics. What do you want to define it as? How high does it have to get to be a Santa Claus rally? I don't know. What I do know is that you have bearish divergence across all the indices. You have low volume. You have negative volume momentum. So can price go up? Yes. If Jack and Jill want to keep paying higher prices for assets, the prices will go up, but you have fewer participants paying these prices, so they find tops, which is why you're retracing today as well. You see this on the Dow. You're struggling at that 34,380 number. You fell back below it. You're at 34,213. You got above it. Let's look at Stocks 50. Stocks 50. Trading here on the MFI, fell through our ascending wedge that we had going on the MFI, built a double top. Looking at Stops 50, you did pump up above 39.57. You're at 39.85. Again, this kind of tracks towards the Dow. But look at the pronounced volume divergence. Negligible volume, left to right. Look at the volume momentum. It's across all the indices, guys. If the media didn't exist, for the business world, you would have a much truer aspect of what price is actually doing. But that's the world that we live in because people get FOMO'd up. You don't believe me? Again, just look at Jim Cramer, okay? They get FOMO'd up and they want to believe in things. I believe in the technicals, okay? Macro market cycles zoomed in to the technicals of the market you're trading. Here's our big pump candle on the S&P. Got above the 200, 233. That was my 618 at 40.32. My next level, my 764 was 41.44, but I have a 45 angle from the GAN fan above that, around 41.22. And this is where the S&P to me is going to build a top in this quadrant, okay? And when I look at this again on the volume divergent, we hit average volume on this big pump bar with 10 minutes to go before the market closed. Okay, before that it was negligible volume, but again, volume down left to right. Okay, volume down left to right. Open this up. Look at the trading range you're in on the MFI. MFI divergence. Remember, this is a volume weighted RSI. Lower highs in the MFI, higher highs in price, negative volume momentum. S&P, remember, is the aggregate. It's the expression of the larger market, 500 companies, okay? So this is bearish trending still. You are bearish divergence. It can go up more. If the MFI keeps going down, you're just building larger and larger bearish divergence on the daily time frame, which means it will spin back down. It will come back down. It is a bear market rally. Sorry to upset Tom Lee. Okay, looking at this on the 4-hour time frame, you can see we were oversold and came back up. Came back up to median line, made a little double top. Look at that volume momentum though. You see that volume momentum? So you can get explosions in volume momentum. Remember, this is buying and selling. This is for that pump candle though. And then look at it drop back off, petering back off. I track all my metrics on the daily time frame. That's my gold standard, okay? Looking at the NASDAQ, nothing impressive here. Even with yesterday's candle, you had that beautiful double top that was formed. Let me turn the magnet off. You had this beautiful double top that was formed for yesterday. Powell is speaking. Again, appeared to be dovish. Market perceived it to be dovish, although he's basically restated the same things from the last meeting or two now. And what you get this one big candle, and now you're up here. But your 200, 233, where I'd want to trade this, is up here substantially higher, okay? Substantially higher, and that's closer to the 1618 at 12,638. That's where I'd be interested in shorting the NASDAQ. Could we near term get up there? Sure we could. But I look at the NASDAQ. The NASDAQ volume's worse than the S&P, right? And this is big tech. Big tech's been bleeding. You guys saw what happened to CrowdStrike. You saw what happened to Snowflake was the other one that came out. I think that was yesterday. Both had sell-offs, both because of forward guidance. The economy will be getting weaker. So you look at the volume here, down left to right, this whole rally up, and yesterday's pump candle wasn't even average volume. You see that? Not even average volume on the largest candle that's been in trend since November 11th. Didn't even make average volume. Okay, so again, weak pump yesterday, no matter how giddy they appeared to be on TV. Looking at the Russell, guys, Russell, same thing, big pump candle. You see on the Russell, oh wait, did we do the MFI? Sorry guys, I mean to keep jumping around. Have some Red Bulls in me. MFI is basically at the median line. Again, negative volume momentum. You see that? Not only negative, your volume momentum yesterday was actually stronger negative. Okay, stronger negative for the pump. Okay, so, and you can see that expressed in the candle as well. You're losing participants paying these prices. Go to the Russell, big pump candle yesterday as well. Russell also had that beautiful double top. Don't need to draw it again. Look at your bearish divergence. You see your bearish divergence on the MFI. Look at your volume momentum. Again, stronger yesterday to the negative side for the pump candle. This is all making tops, guys. Might go up some more, but they're all in their quadrant where they're going to be making tops. Again, bearish divergence on the volume here for the Russell as well. Not even an average volume bar. Look at this, negligible volume. This whole rise up. Look at that candle from yesterday. Right there. Not even, well below average volume in a 21-day trend. Didn't even hit it in the Russell, but you got a big, what, $50, $60 move up, $70 move up. So again, you're right back in that top range and all these indices. They're going to be making tops, and everybody's going to be so surprised when they see this on, live, I guess, as it occurs. Real quick, so we're at 30 minutes. I'm sorry. Real quick, looking at silver. Silver on a pump as well because it's moving with the markets. Inflation slightly came down. Powell seemed more dovish from the last CPI. Powell seemed more dovish, and the metals moved up with the markets. Silver above it's 200, 233. So we'll see if this continues. It looks like it's finding resistance. You are bearish here on the money flow. Again, making bearish divergence even on the metals, guys. Everything's setting up for shorts. Okay, do you see what I'm showing you here? Everything is setting up for shorts. We'll get deeper into commodities. I'll show natural gas and stuff maybe next video. And then looking at gold. Gold as well, looking at gold, pumped finally to the 200 like I wanted to see. Got above it, want to see where this pump candle ends. Again, these are daily time frames where I'm trading. Again, low volume, bearish divergence, watching gold as well. Last one, guys, euro dollar. Euro dollar, we've had two great trades, getting us over 425 pips in two trades, and now we pump back up again to the 1 fib at 1.04968. Got above it. Again, the dollar dropping. I need to see the dollar make a bottom. Okay, dollar needs to make a bottom, or you could be coming up to the 1618 at 1.06662. Oh, the Freemasons are going to like that one. All right, guys, hope you enjoyed the video. Do like, do subscribe. Talk to you guys soon. Take care, everybody.